only for council tenants who are eligible. So when I say eligible, first thing, you've got to have lived in council for at least 3 years. Now, the way it works is it doesn't have to be 3 years in one place. It could be a combination. So you could have done 1 year somewhere, then gone to even private rent, and then come back and done another 2 years, as long as you've got all the dates, yeah, and you can actually verify all of that. Someone did ask me, how can I remember? Because even I sometimes forget where I lived where and at what point. I mean, you can always look at your credit report, and the credit report I use is Check My File, and like, you'll go through all the normal pages, and I'll go through credit reports as well actually later on, but you go through all of it, and at the bottom you'll see addresses, and it's all to do with the electoral roll. So a lot of people, every time they register to vote, that automatically will give them an address. So hopefully that will help you. Also, bank statements might help and things like that. But I think the best thing is your credit report, because it does actually at the bottom. I use it when I'm doing people's mortgages actually, and I have to fill out their address history. I just go to the bottom of their report and figure out, where they've lived, because every time you apply for a form of credit, you have to give an address. So it's all normally on your credit report. So hopefully that helps. Then once you've lived there more than 3 years, you're definitely eligible. The next thing is, there's been a little bit of confusion between right to acquire, which is the housing association, and right to buy, which is for council tenants. And then there's some people that are in the grey area of where they had a council property and they were offered a housing association, and vice versa. You do have to talk to your individual council to really get what you should do in that situation. Full transparency. What basically, my name, as you all know, is Manda, and I am a mortgage advisor. I call myself the mortgage coach because I combine financial coaching with mortgage education, but I'm also a mortgage broker, advisor, whatever you want to call it. So I do mortgages. There's been a lot of really technical right to buy questions. I have a general idea of right to buy. I've made it a point to learn as much as I can because I like to help my clients. But at the end of the day, if it is very technical, I'm not ever going to assume. I will flatly tell you I don't know, and I will always try my best to point you in the right direction of someone who does know. I really don't believe in just saying that I know stuff. I don't see the point, because it wastes your time and it wastes my time. So I have been in situations and I've had to say to people, councils differ, so speak. You can't even go to the government website half the time because councils have different, I've been talking to a lot of people, as you can imagine, over the past sort of 2.5 weeks, and some have just had the right to buy form and it's all good. Other people have had more than one form. So the boroughs are doing different things. Some have insisted that you have like a decision in principle, or you show that you can get a mortgage, things like that. Others are just happy for you to fill in your details. So it really, really, really does depend. So the next thing is, right, let me see if there's a few questions I can answer. Right, so the first one is, right, I'm not sure if your flat's going to be demolished next year, whether you can still, it's been 10 years of the council. I genuinely don't know. I think this is definitely one to talk to the council about, because once you get your right to buy application, and you fill it out, and if you get the offer letter to that point, I assume if you bought it and then it was going to be demolished, they'd offer you some other property. But because you now own it, I'm not sure how that works. Do they offer you some kind of compensation? I'm genuinely not sure how that one would work. How to make sure the council don't undervalue your overvalue the property. Right, so the best thing when you're getting your property valued is to get a second opinion. And as someone told me yesterday that they're putting their property up for appeal because they're not happy with the valuation, and it's added another 12 weeks on. So for all of those that were completely surprised by this to buy and want more time, this is obviously an advantage for her. It gives her more time. So what I'm going to do first is go through the right to buy process, and then I will look at questions, or else I'll just jump around all over the place, and I don't want to confuse anyone. So as I said, what is happening? So at the moment, at this point of time, as of recording on the 19th of November 2024, the right to buy discounts are just split into two. London, which is 136,400, and outside of London, that is 102,400. Now, these are the maximums. So obviously, when you go and apply, depending on how many years you've been with the property, they will prorata it. What I mean by that is, if you've only lived there 3 years, they're not going to give you the full discount. They'll give you a of it. If you've lived there longer, depending on when it gets maxed out, that will determine whether you get all of the discount or some of the discount. But what I'm trying to say is those are capped a much higher rate than they will be in 2 days' time. That's 2 days' time. So what everybody needs to understand is they either need to apply today or tomorrow. If they apply on the 21st, that is the day that the rates change. So just so you're aware, and I'll bring this up so I can actually tell you the exact discounts that they're going to be. But in essence, they're going to be ranging from 38,000 to 16,000, depending on what area you are. But people that are in London, it's going from 136,400, and in some places in London to 16,000. So basically, what you're looking at is 120k you're losing out on. So look on the government website, and it will say, depending on the locations, what they are. And I will post that up again. I think I already have, but I'll happily post it again if you need to see it. So yeah, you can just put in the chat right to buy discount, and make sure that I post it in the chat for you. So you apply. It's called the RTB1 form. Then, depending on the council, there may be another form, there may not. Then you're told that within 4 weeks, you'll hear back from the council, you'll get the valuation and all that good stuff. Now, I don't mean to be pessimistic. I think I'm just being realistic here. But at the end of the day, so 4 weeks from 20th is the 20th of December, roughly. Now, that's, not even a week before Christmas. As far as I know, a lot of councils are already off at that point, and they were not expecting this many levels of applications. So I expect, apart from the automatic stuff that they've managed to set up, so an auto reply and that kind of stuff, I genuinely don't think you're going to hear back. But the steps are, once you've heard back, they will arrange a time to get in. Someone will come around and they'll value your property. As a lot of people have said in the chat, they're meant to value it on a shell, not on any works that you've done up to it. So just double check that. I had one client, and they literally pointed out every single fault the property had to try and downvalue it. You can point out, this I've put on the form that I've done my bathroom, I've done my kitchen, this shouldn't be included. Let them know that you know how it should be valued. Then I think, they won't muck you about as much, because they know the other thing is, as I said, there is an appeal process if you're not happy with the valuation of your property. You can go on Zoopla, and under house prices, put in your postcode and get a rough idea of how much the property is worth, basically, to get a rough idea. But I've been told that the council are meant to value it slightly lower than what Zoopla and the market value is. So be aware of that. Right, so once they've valued it, if all goes well, fingers crossed, the application goes through. And again, it isn't a done deal. If some people have been refused, if the application doesn't go through and you don't get your section 125 on notice, what I suggest is you ask for an explanation in writing. It's good to talk to them over the phone and try and understand what they're saying, but I would always, always, always ask for in writing, because you could speak to one person one day, because I've done this when I'm speaking to lenders. I speak to one person one day, talk through the criteria, they say yes or no, and then I speak to someone the next day and they're like, no, they were wrong. So I always, whenever I speak to anyone, always ask for their email address, ask for the person I'm speaking to, and then I send an email as per conversation and I put it in. If you're not the best at English, or English isn't your first language, or you're just not very, very good at English, and that's me, I'm not the best at English. So I apologize when I'm messaging people back. Sometimes I've got spelling mistakes. I've always been a lot better with maths than I have with English. So anyway, I just put what I want to say in chat GPT, and then it comes out with a really nice response, and I can copy and paste that anywhere. It checks your spelling and it checks what you're trying to say and makes it more user friendly. So that's a suggestion. So you get the explanation in writing, and then I would ask to speak to a supervisor, and if you're not happy. And also, once you've got it in writing, you can take that to your citizens' advice and see if they can give you some help if you're really not happy with the way the process is going. So that's the negative side. If it all goes through, great, and you've got the offer letter, this is how it works. Now, the offer letter has 3 parts. That, as a mortgage advisor, this is the most important thing for me. It's normally like on the 2nd or 3rd page, and it will say at the top market value. So that is what the value of the property they're valuing at. Then it will tell you what the discount you're getting is, and then it will tell you what the purchase price is. Now, as we went through the example before, I will go through it again. So basically, what it will say is, initially it will say market value. So for example, in this example, it says 300,000. Then it will say discount, just for simple numbers. Say instead of giving you the 102,400 or the 136,400, they give you 100. Now, what will happen is, once you discount the 100 off the 300, that gives you 200. Now, I myself as the mortgage advisor, so if you decide to do the mortgage with me, or if you decide to go to another mortgage advisor, it's good to understand what they'll be doing. So what they will be doing is, when they apply for a mortgage on your behalf, they will look at, firstly, your affordability, and I will come back to that. But what they will be doing, what the mortgage application should say is, the purchase price is what the market value is. Those two are meant to equal each other. Then the discount is your deposit. But depending on what lender there is, some lenders will let you have 100% of the deposit, as I've said before, some will have less. Then some people have family and friends who are gifting them the money. If it's a gift, that's great, because you've got the money and you don't have to pay it back, so it doesn't affect your lending. If it is a loan and it's not a gift, then that will reduce your affordability anyway, because you'll have to put on the mortgage that you're receiving a loan. So just so to be clear, a gift is better than a loan, because it means, that when it comes to the affordability of the mortgage, you don't have to put that down. Now, the next thing to do is whatever is left. So if the deposit is, the discount plus a gift, or just the deposit or cash or whatever, then whatever's left is the purchase price in all intents and purposes, but it also is the loan amount. Now, there are some lenders that won't lend you 100% of the deposit, and the reason why is because they only want to lend you 95 or 90 or whatever it is, depending. But what they're saying is, if you just use the deposit, which is basically just a letter, you're not actually putting any money down. So they're worried about the risk factor. So for that purpose, they are, asking you to put less. But the majority of lenders, and as I said, whichever mortgage advisor you go to, ask them, say that you want 100% of your deposit to be used, basically. The next thing that I wanted to talk about is the actual right to buy calculator. Now, I've spoken to a couple of people about this, and when I've talked them through it, it seems to people have understood. So basically, unfortunately, I can't share my screen, but I will talk you through it. So what I really want people to do is to get an understanding from tonight. This is my end goal, is to have a rough idea about what their property is going to be valued at. Again, as I said, you can go on Zoopla or on the market or Rightmove, whatever whatever website really you want to do. And there are different criterias when you go on to like Zoopla, for instance. And when you go on it, there are different sections. So there's on Zoopla to get this is to get the value of your property. You've got for sale, to rent, new homes, and then house prices. I always go to house prices. Then I put in my postcode. So, you know, obviously you put in your postcode and see, building up the excitement here. Right. And then once you've got your postcode, it will give you a list, and then you use the drop down address to find your door number. And then you go from there, you click in and you say you want to see what it's worth. And then they'll ask you if you own it. You can just put that you own it, to be honest. They're not going to double check these things. Or you can put in that you don't own it. Is it let out? Is it not? Just answer those few questions. It's all for market research, to be honest. And then once you've answered those few questions, you put save and continue, and then it will give you a rough price of how much they think the property's worth. So that's step number one. Now, this information you are going to need in the calculator. So when you're looking at the right to buy calculator, wow, they've changed the layout of it. It wasn't like this the other day. Right, so first you need the number of years of your tenancy. Now, as I was saying before, when you're looking at the number of years of your tenancy, you add them all up. So if you've lived 2 years as a council tenant in one place, 3 years as another place, 4 years as another place, just add it all up. It's cumulatively. Yeah, it's the sum of all of it. Okay, so you put that in. And then it says insert the estimated value of the property. Now, obviously, we went on to Zoopla to get that. And then obviously you say whether it's a house or a flat. And then you say whether you're in London or not. So there is that calculator. And then it says what percentage of the discount you're entitled to, and then what the discount is going to be. So it works all of that out for you. So, you know, obviously, though, it isn't 100%. It's just an estimate, because the council may, you know, not agree with the years you've put or the value you've put, or, you know, the only things you're 100% sure of is whether it's a house or a flat. But the other bits, they might dispute. So that's just best to double check. All right, so the next thing to do that everybody wants to know about is about affordability. Now, when I mean affordability, it's how much you guys can afford. Now, if it is, I'll go through 3 different things. So the most straightforward is if you're employed. So if you're employed, the way they work out your affordability. So I'm just bringing up my affordability system. So basically, it is quite interesting. All lenders literally lend different values. So I've got this system that actually gives me affordability for 45 different lenders, so banks, building societies. Just so you know, and it's a question a lot of people ask me while this is loading up. I am a mortgage advisor. I do mortgages. I'm directly authorized. So what that means is I'm an independent mortgage advisor. Some mortgage advisors are linked to a network, and they only have a certain amount of mortgages they can access. Some mortgage advisors are literally working direct. Now, I know a lot of you, because you're first time buyers, have this feeling that I should go to my current account, the bank that has my current account first. That isn't always the best bet, because there are a lot of lenders out there, and depending on your criteria, they will agree with different things. So as an example, if you're employed, and we'll start with employed, they will obviously take your salary. Now, some will take your future salary. Like, so if you're getting a pay rise in a month or 2 months time, as long as you've got a letter to say that, they will allow it. Say, for example, you're on maternity leave, but you've got proof that you're going to go back to work, they'll allow it. But different lenders allow different things. Say, for example, you get a bonus. Some lenders will say you need to have your bonus at least twice. So if you've only worked there a year and it's an annual bonus, they won't accept it. They won't even give you half of what the bonus is, because as far as they're concerned, there haven't been 2 examples of it. But then on the other side of things, it's a case of not knowing that. So you just need to know what the lenders are willing to do. So that's for employed. Self-employed, there are some, and there's 2 different types of self-employed sole trader and self-employed limited company. Now, if you're a limited company, you're obviously a director. Sometimes they'll take the net profit of the limited company, sometimes they'll take salary and dividends, and that's the way you'd pay yourself. And if you're a limited company director, then you should know about salary and dividends, but you can always speak to your accountant, or you can always WhatsApp me. As I said, anyone who wants to contact me directly, please, what everybody's been doing is DMing me a message, and then I'm more than willing to give you my number, and we can WhatsApp message each other or voice note each other. At the moment, as you can imagine, I'm falling quite behind in the amount of people that I need to speak to. So voice notes and texts are the quickest way for us to get our point across and move across. So that's something to be aware of. Now, the other thing is, if you're a sole trader, then they'll just look at your self-assessments and go on that. So they'll look for your SA 302s, they'll look at your tax calculations and your summary. So I hope that's crystal clear. And then the question that I'm getting asked quite a lot is about benefits. Now, some lenders will take 100% of the benefit. Some people will only take 50%. What I can 100% tell you is they won't take any housing benefit at all whatsoever. So whether it's universal credit and you have to take the housing element out of it, or whether it's the old style housing benefit and you haven't swapped over yet, unfortunately, they won't take it. So you need to find the right lender to see whether they'll take all of your benefits. Now, there's a lot of lenders out there, and they take universal credit. They take why can I not think of the benefits now? Right, they take universal credit. They take PIP. So they take a lot of the different benefits. Like, I had one lady who's a foster. She does fostering, and they take foster allowance. I know people who, there are a couple, and one's on carers allowance and one's on PIP, or a combination of the 2, and they take that as well. Now, not all lenders will take 100% of that. Some lenders, you have to have like at least a part-time job as well, to have some income. So that's also good to be aware of. Depending on your situation, if you've only been working, say, full-time for a couple of months, they may take that. If you've got a part-time job with your full-time job, they like to see a history of you doing it for quite a while, like 12 months. So I wouldn't recommend people just jump out and get a part-time job to go along with their full-time job. But then again, as I said, lenders are getting a bit more flexible. And, you know, if you looked now, the fact that it's meant to be 4 weeks before you hear back, and then you've got 12 weeks after that, and then there are other extensions that you can ask your solicitor to put in place before completion, and that way will help as well. So I hope I've explained a lot. I hope you've got a lot out of it. I will just check what questions and see if there's anything that I haven't covered. Let's have a look. So right. So yeah, if you've got disability allowance and things like that, you can apply. What I'm saying to everyone is apply, because you've only got till the end tomorrow, because the right to buy discount changes on Thursday. So I'd say apply, and then we can have a look at affordability, because I've really run out of time to help people with their affordability right now, unfortunately. So someone said, do you know any good right to buy mortgages in South London? Yeah, if you can message me, at the end of the day, I can find mortgages in all over the UK. So yeah, that's not a problem at all. There is a timing issue. Obviously, you need the Section 125 before we can actually start the mortgage process. But if for some reason your council wants you to do a decision in principle, then we can do that. Okay, so the way a mortgage works, let's talk about that just to explain. So first, when you're getting a mortgage, there are stages. So the first stage is the sourcing stage. This is where and your situation, we find the right lender for you. Now, some lenders will include mortgages that have free legal, and some won't, but it really does depend. Sometimes just looking for a mortgage that has free legal isn't the way to go, because it might not be the right mortgage for you. The next thing to understand about how mortgages work are, and I'm really going back to, explaining everything here. So if you know all this, great. If you don't, then hopefully you'll get something. But with the mortgage, there's two elements to it. There's the interest and there's the capital. Now,